A critical part of the rebound from the COVID crisis is getting unemployment compensation payments to those of you who've lost your jobs to help you get back on your feet.
But now a new analysis suggests the state's unemployment fund could actually go broke in just 4 months. News Channel 5's chief investigative reporter Phil Williams is keeping a close watch on this and what it means to you as part of our new series, The Rebound. Phil.
Rory, this is a critical issue that we have been watching closely. Tennessee's labor commissioner recently claimed that the state's unemployment compensation fund was one of the best in the country. So we checked. It turns out it's not.
This is a CBS News special report. I'm Tony DeCopel in New York. The Labor Department has just released a new report on jobless claims.
In recent weeks, the breaking news,
and this is just heart-wrenching,
has increasingly been news of the country's broken economy as COVID-19 has forced businesses to close and millions of workers to turn to unemployment insurance to survive.
On April 2nd, after I received my layoff notice and got all my state-approved paperwork, I went on the website of the state of Tennessee Unemployment, put in a claim for unemployment. The next day, I got a notice that it had been denied.
Jim Holmes immediately appealed, but he's heard nothing since. Still, he knows there are people who are hurting even more than him.
I know that there's people out there in my neighborhood that it is critical to them. It's a matter of them being able to put food on their table and keep a roof over their head.
Hello everyone, this is Jeff McCord, Commissioner of Labor and Workforce Development.
The man in charge of the state's unemployment trust fund, Labor Commissioner Jeff McCord, recently insisted there was nothing to worry about.
The traditional claims insurance is handled by insurance trust fund, which is basically a savings account. And it's in really good shape. It's one of the best shapes in the country.
But that's not what we found in the latest trust fund solvency report put out by the federal government. When it ranks the financial stability of the states and territories' unemployment funds, Tennessee comes in at number 33. It's below the minimum solvency level. And while it shows most states would be able to borrow money interest-free from the federal government, the list of those not eligible includes Tennessee.
Tennessee is about middle of the pack in its ability to pay out these benefits, not one of the best in the country.
Jared Walczak is director of state policy for the non-partisan Tax Foundation.
Tennessee was just under the minimum adequate solvency level that the federal government recommends before this crisis. And the reality is this crisis is way worse than what most states were preparing for.
So is this a crisis?
It is a crisis for states and their finances and ultimately, therefore, for their taxpayers.
At current rates, the Tax Foundation estimates that Tennessee's unemployment fund will run out of money in 18 weeks or less. Kentucky is worse. It has just 4 weeks reserve. Georgia has 8. But Alabama has 23 weeks. Mississippi has 33.
While there's 18 weeks worth of ability to pay out current claims, we'll see more claims soon, and these numbers will get smaller.
And when states run out of money, they'll have to borrow if they want to keep paying out their state's unemployment benefits.
Tennessee will take longer than many, and that's good news. That means that Tennessee will have to borrow less than others, but this is likely going to happen, and it's going to potentially take years to pay this off, meaning higher tax rates and more challenges for the state fiscally for years to come.
And just in the last 30 minutes, Governor Bill Lee told reporters by phone, quote, "Yes, sir, we are concerned in the sense that we want to track it and know what's happening and make plans as such." He said his team has asked researchers at the University of Tennessee to look at whether the state may need to borrow money from the federal government to replenish the unemployment trust fund. Of course, we'll keep watching. Vicki?